All right, hi everyone, welcome to today's webinar, Automated Trading and Execution Algorithms on the TT platform. I'm Jake Bax with Rcm-X, and I'm joined by Guy Scott from Trading Technologies, and we're going to be your presenters for the day. A couple of housekeeping notes before we get started. We're going to be holding a Q&A session at the end of today's presentation, and so I encourage you to submit your questions at any time throughout the webinar, and we'll try to answer as many as time permits towards the end. To submit, simply click on the question mark icon on the right side of your window. Today's webinar is also being recorded, and we're going to be sending out the link for all of you that registered at the end of today's presentation. And we'll send that out, and feel free to forward that over to anyone else you think that might find this interesting. This webinar is going to cover at a very high level a little bit about who Rcm-X and TT are, but more importantly, the new TT platform, Rcm-X's execution algorithms, and how the two work seamlessly together. And so with that said, I'm actually going to kick it over to Guy for a quick introduction about TT and their new platform. Guy.
Thanks, Jake. My name is Guy Scott. I head up sales for the Americas with TT. Firstly, for those of you who aren't entirely familiar with TT, I thought it may be worth just quickly summarizing what exactly the TT platform is. TT is the next generation trading platform from Trading Technologies, and it differs from the X-Trader platform in that it's completely hosted as a software as a service. This enables us to provide significantly faster performance, and it's also built on a modular architecture which enables TT to innovate and respond to client requirements. For example, delivering execution algos which are not available on the X-Trader platform. So as many of you know, we're in the process of migrating TT's global client base to the TT platform. Our clients have seen many areas of improvement on TT over the legacy X-Trader screen, so I thought it might be helpful to run through some of the features that resonate with our customers. First, there's a reduction in order latency on TT, both through significant improvements in the architecture of the platform itself, as well as increased access to exchange colocation. All latency-sensitive applications run within the exchange's colocation facilities to ensure optimal performance and the lowest latencies. Global market access. TT provides access to a much broader list of global markets. Well over 40 futures markets are available today. And by the end of this year, we expect to offer access to virtually every global futures exchange. The TT platform is also broker neutral, meaning from a technology perspective, every end user has access to every global broker on the platform, every tier 1 global bank, and all the regional brokers, whether in Brazil, Canada, Korea, or Malaysia, or anywhere else, that there's a futures market, you have access to a broker. We've also launched an advanced options execution platform, which has generated tremendous interest across both the sell side and the buy side clients. And then there's access to mobile trading, something that's become very popular with traders across all client types. Even if you're not planning to trade electronically when you leave your desk, simply having access to your workspace on your phone or tablet has proved very popular. And then finally, another feature that's resonating with all our clients is, and the focus of today's webinar is execution algos. TT provides the functionality to design and build your own algos or strategies within the Algo Design Lab, or ADL as it's usually referred to. We also provide a number of TT advanced order types, such as timed sliced orders, OCOs, and iceberg orders. But now, for the first time, TT customers have access to high-performance execution algos that are accessed directly from the TT screen. One of our key partners in this area is Rcm-X, who join us today to explain why so many of our clients and customers are excited about this new offering. Thanks, Jake.
Great, thanks, Guy. So a little bit of background on Rcm-X. We're the technology arm of RCM Alternatives, specializing in execution and high-frequency technologies. The group actually formed years ago, starting at Stafford, also known as Ronin, and moved to TD Securities, where they ran programs like the StatArb trading, and they helped the bank build out some of their systems like their ATS. While at the bank, Joe Signorelli and David Don, which are the founding partners of Rcm-X, started a software company, Cactus Trading Systems, because they saw a need for an improved technology stack for building low latency technologies. And so started Strategy Studio. From there, the team saw a perfect fit into the largely underserved execution algo space, largely because the technology served as a perfect algo engine with its decision-making speeds. The software and team was eventually acquired by Wedbush/Lime Brokerage, and then now into RCM, which has given us the ability to build out the algos in the future space. Now, as we all know, good business means not just increasing revenues, but also controlling costs. And in the world of asset management and trading, that means not just working on creating better trading models, but also making sure that the execution of those models is as cost-effective as possible. That's why we hammer brokers over a few extra pennies in commissions, look for discounts from vendors, and complain about exchange fees. But beyond those fixed costs, there are variable costs associated with trading that are often overlooked. There's the opportunity cost of not being able to get filled at the time or price you'd like, and the temporary or permanent impact that's caused by the market or by the very order you're trying to execute. We all want to be the fly on the bull's back following its moves, not the one causing it to move. And so I wanted to show a super simple example here of how some of these slippage statistics can, and other variable costs can have a real impact on your trading, and hopefully why execution algos should be a part of your everyday workflows. So if you look at the table I have on the screen, this is a basic example showing how slippage can have a meaningful impact on those returns. This is showing a trader with both either $1 million or $100 million, trading just 2,500 round turns for the year. And if you look at the annual cost of crossing columns, you can see that's basically saying you're slipping one tick on average for your orders and the impacts on your returns, both as a dollar amount and as a percentage. This is essentially free money that you're giving away to high-frequency traders and market-making shops. But the scary part of this whole thing is that if you're trading point and click on average and you're slipping only one tick, that's really not all that bad. Sure, some of you might have better slippage than that, but many of you are going to have worse. Reducing these variable costs is what this game is all about. And it's important to know that you don't need to be trading huge order sizes to use these. You know, I think one of the comments I hear most frequently is, well, my order sizes aren't hundreds of lots, so I don't know that execution algos make sense for me. But that's not true at all. Sure, of course, we have traders that are doing thousands of lot orders, but there are also very small order sizes as well. A lot of those percentages will stay the same in this equation, and so think about what an extra 3, 4, or even more % could mean to you. Big or small, it's worth looking at how this algo execution can help you. Now, as we look at why all of this is the way that it is, much of it has to do with the way that trading has evolved versus execution over time, and where a small percentage of the market participants have a major advantage over the rest of us. If you think about it, trading obviously started in the pits, it moved to the mouse, and it's largely transitioned to the server. Execution, on the other hand, has taken a similar path, but it's struggled to make that last jump to the server. And now, why does that matter for you? Well, it matters because, one, we could all always be doing everything bigger, better, faster, but more so than that, there are other groups that already are. And like I mentioned, it is a relatively small percentage, but those small percentages are very good at playing this game. They have algorithms that are watching market data, looking for patterns in the right places and at the right times, all of which are optimized to take advantage of that time and that product. And when you combine that with the fact that so many strategies are becoming more systematic in nature, they're playing this game a lot better than the rest of us. Now, as we think about how those changes have impacted the marketplace as it currently stands, it's made things like market micro and macro structure so much more important. There's so many things to pay attention to nowadays. I mean, if you take the CME alone, for instance, the exchange has 8 different matching engines, and do you know which products are taking advantage of which matching engines? Is your product FIFO, where speed has a major impact on where you're getting filled and if it's at the price you'd like? Is it pro rata, where the sizing of your orders dictates your fills, or is it a mix of both? Is it one of the other ones entirely? And you could even get more granular than this. Do you pay attention to things like how the CME displays its orders in the data feeds? And when they changed the display from market by price to market by order about 1.5 years or 2 years ago. Now there's an order ID displayed on each and every order. And so, for instance, let's say you're using an iceberg order that's native to the exchange. Your order IDs are going to be displayed to the market, basically advertising themselves to those algorithms that those high-frequency shops are running. And it's tough to know how this all is working if you're just watching it, because it all happens so fast. But a lot of these nuances are what make up those slippage statistics that I mentioned before. Complications like the order ID display and matching engine characteristics are all things that Rcm-X can solve for you. You know, we believe that one of our biggest advantages over the majority of the algo space is that our algos are built by traders. All of our quants have experience trading, particularly in the high frequency and market making space. And that's important because we know the games that are played by those firms. We know what those high-frequency algorithms are looking for, where the patterns they're trying to pick out, and where they think they see an edge. We build extensive anti-gaming techniques into each and every one of our algos on a product-by-product basis. And not only that, we give the power of additional anti-gaming techniques to the traders in our parameter settings, of which I'll go over here in a second. While all this matching engine, matching algorithm stuff is complicated, the point I'm trying to make here is that ultimately you don't need to worry about it. You can let Rcm-X worry about it for you. You worry about making money, and I'll worry about making sure that you're doing it in the most efficient way possible. And so with all that in mind, let's take a look at our actual algo suite. You can see we have our collection of 7 algos, as well as the ability to build custom algos. Now, of the 7 algos, we essentially break them into 2 categories, scheduled and dynamic. The scheduled algos, include VWAP, TWAP, IS, and close. And those algos are scheduled in the sense that they're building volume profiles based on historic data, and then adjusting those profiles based on things like where we're at in the expiry cycle, or for potential for changes in those patterns, particularly for products where yesterday might not be a good predictor of today. With these algos, there are many parameters, and those are usually targeted towards how far the algo is allowed to deviate from that schedule. And we set those up individually for you as a firm, by product, by account, by trader, however you like. And these algos are still dynamically reacting to tick-by-tick data in the marketplace, but we call them scheduled because at the root of it, they're based on a schedule or volume profile that we're building. So I actually have an example of showing some of the simple profiles as to how we think about these. Now, obviously, very simplistic in nature, but you can see that and that's targeted towards the average volume profile of most futures products, where most of the volume is at the start of the day and at the end of the day, and it kind of tapers off in the middle. I also have showed IS here, which is our arrival price algo, and that's a variation on VWAP that is tilting the schedule towards the beginning of the order. So it's going to trade a lot faster up front and then slow down as it gets towards the end of the order. Closed is the mirror image of that, where it's going to come in slow and then try to ramp up volume as it gets towards the end of the order, which is most oftentimes into the close of the day. Now, if we go back and we look at the dynamic algos, those include POV, scale POV, and Prowler. And unlike the scheduled algos, the dynamic algos don't have a schedule at their base, and they're trading based off the current day's trades and market data. POV and scale POV are trading based on a specified level or band of participation, while Prowler, which is most similar to an enhanced iceberg algo, is sending individual trades and sizes with settings that you're specifying. Lastly, I'll touch on quickly, Rcm-X offers the ability to build custom algos, which that can be as simple as combining a couple algos. For instance, you say, I don't know, I want to trade based on a certain percentage of volume until a certain indicator or threshold is met. When that happens, I want to switch over to a Prowler-based algo or something along those lines. Or it can be as complex as, say, you have an idea for an execution strategy that you've designed from scratch. We'll help you build that out and tell you exactly what we think it entails to get it into production. We can typically build these relatively quickly, usually in a matter of weeks, and depending on the complexity of the algo, usually without an upfront cost. And I could spend the rest of the webinar talking solely about our custom algos, but rather than doing that, I'd rather have you reach out to me after this for more questions, or if you have an idea, you want to sit down and spec out what you think this might take. Now, in terms of the parameters for the algos, there are basically 2 schools of thought that we see with our traders. We have traders that trust the math, and they want to do what it says more closely. And then we have the traders that want to have more of an influence or more of an opinion on what the algos are going to do specifically. We tried to give you the best of both worlds. If you want to trust the math and let the defaults, or leave the defaults and let the algo take care of the rest, you can do that, or you can change the parameters for more control. And I have a list of all the parameters, or a good amount of the parameters on the screen right now that you can edit as you get more comfortable with the algos. But the important thing I want to make here is that we're going to optimize these for you on a per product or per client or per trader or per firm basis, depending on how you want it. So we'll sit down with you on these, go through each individual one, and make sure they are set up for the way that you want them to work. So I have an example actually showing how a couple of the parameters we can use to edit some of the algos. And so first I have our aggression parameter with VWAP. And so what that's doing is telling the algo how far it can deviate from that schedule that we're building. A level 10 is the schedule basically, which is that solid blue line in the middle. That's the schedule that we're building. And so with a level 10, the algo is going to try to follow that as closely as it possibly can. And what that means is it's going to cross the spread more frequently to try to stay in line with where that schedule is at. The opposite of that would obviously be a 0, and those are the more thickly dotted lines, and that's allowing the algo maximum fluctuation away from that schedule. 5 is the default, which is in the middle, and that's what we start the algo at. That is, kind of a best of both worlds, where it's staying on schedule, but it's also allowed to fluctuate a little bit from it. You can also see how we apply that to another algo, like our implementation shortfall or arrival price algo. And so we're still looking at aggression on this one, but here it's affecting the steepness of the tilt. And so you can say you want the algo to trade really quickly up front, and that's at level 10 of aggression, meaning you might see a little bit more market impact because you're trading a lot faster, but that's going to come with the trade-off of you have a little bit more certainty around those execution time prices. A lower aggression setting is going to come in faster than VWAP, but it's going to be a lot more closely to that rather than being much, much faster. Now, obviously, all of this is going to look very different for all of you. There's the need to get as close to trading signals as possible, desires to skew your execution towards the open or close or even a subset of those, and there's opportunistic execution strategies like our Prowler algo that I mentioned, where you want to sometimes show your hand and sometimes hide it. And if you have a special view on how you want your orders to get executed or a problem you think you're seeing in your execution, on top of that, how do you choose the algo that you think is right for you? All of these parameter settings and individual setups are Rcm-X's specialty. We actually think of ourselves where the initial piece of the puzzle is giving you the algos. The rest of it is actually thinking of ourselves as execution consultants, where we're helping you set these up specifically for you. And so if you're saying to yourself, I don't know where I'd start with what settings, or let alone which algo I'd choose, we'll walk through each of those with you. And as part of the offering, we distribute a daily TCA report that was built by our partner One Market Data, which is essentially an algo scorecard showing you how they performed. So we're going to break down the performance over time and show you how to make changes as things change, because what worked yesterday might not work well today. We're going to help you stay at the forefront of this game, making sure that the execution tools that you're using are as up to date as possible. And so just to go over a little bit about why we think we're better than other algo providers. Like I mentioned, our algos are built by traders with high frequency experience. So you know that these algos were designed with those groups and those algorithms in mind, meaning that we are going to stay as up to date as possible as the markets evolve. Second, our software, Strategy Studio, is one of the fastest out there. And a lot of you might say, yeah, but my strategy isn't necessarily predicated around speed. That's probably a lot less true than you think. A lot of this is about being able to put your orders in the book and pull them out faster and make just decisions within the software as fast as possible. And that's a lot of what the Strategy Studio allows us to do. Third, let our execution consulting team worry about all the stuff that you don't want to. You worry about making money, and I'll make sure you're doing it in the most effective way possible. Fourth and foremost is through our custom algos, which we can build quickly, efficiently, and most importantly, specifically to match your needs. And while in many cases, the off-the-shelf algos that we offer are great, some of the firms that we work with are looking for a little bit more specificity in terms of their needs. So come to us with those basic or complex ideas. We'll spec it out with our dev team, our data analytics, and our execution consulting team, so that you can see exactly what that project would take and how long. And as I quickly touched on before, because of our advantage on the technology side with Strategy Studio, we can design, create, test, and implement those strategies in very little time, which is obviously both good for you and for us. Now, I actually have a quick video showing you how these actually work on a screen, so you can see how they work within your TT infrastructure. So you can see that most of this actually works the same way that it currently does. And so you can see I have my TT screen open now. And you can see I have a few ladders open with a few different products, as well as a market grid. You can see that this is also a UAT environment, so some of the things like prices may seem a little bit off. But very similar to the way you currently enter orders. The difference being you're selecting an algo now rather than just selecting a normal order type. So to view the algos, you're going to click on the order type dropdown. You can see RCM's algos in the bottom of that list. So I'll select an algo. Let's start with, say, VWAP. A separate order ticket will pop up with the parameters associated for that algo. And again, like I mentioned earlier in the presentation, almost all of these are optional. VWAP, for example, only requires either an end time or a duration. And so I'll set that to, let's say, 10 minutes for now. I'll click on quantity, and I'll click the ladder to submit the order. Working orders are visible down at the bottom in the order book widget, and you can see useful statistics, like what percentage of the order is working, filled, the executed quantity, and stuff like that. And you can also see the individual fills in the fills widget reporting on my left side of my screen. Now I placed that VWAP order as a market order, but the algos also support limits, stops, and stop limits. The difference between a market and a limit order for algos is very similar to the normal order types. The difference being with an algo order, a market is not just necessarily going to fill it all or fill your entire order at one price, and while a limit will not trade until your limit is hit. If the price falls back outside of that limit, it will stop trading until it goes back within the limit. And so I just submitted another VWAP a couple ticks below the market with a limit, and it'll work similarly. We can run through a few of these other algos. So again, if I pull up a VWAP ticket, you're going to be able to see some of the associated parameters that work with VWAP. So you can see that you can obviously choose the order type, like I mentioned. You can choose like a participation rate that you'd like the algo to try to follow or stay below. You can change the aggression setting, like I was talking about in that example earlier. And you can set what we call an I would price, which is essentially a price that if the market gets there, you're telling the algo to ignore the parameters and schedules and just attempt to get as much of the algo done or the order done at that price as possible. We can switch over to a different algo like implementation shortfall. And so you can see with this algo, we can still select things like an order type, a participation rate, and an I would price. But with IS, you have some additional options. So you can set an aggression like I mentioned earlier, but again, this affects the tilt or the steepness of the tilt rather than the deviation from the schedule. You can choose a couple different tilt modes to pay attention to how the algo is actually reacting to market data. You can change a tracking setting, which allows you to reflect an opinion on the market if you think the market's either reverting or trending. And so I'll quickly submit one of these as well and let that work. Lastly, I'll touch on one of our non-scheduled algos like Prowler. And again, Prowler is our enhanced iceberg algo with a bunch of added functionality. So with that, Prowler is going to let you set a min and a max show, which is just like it sounds, the min or the max show that the algo is allowed to show to the book at any one time. You can set a passive price level, which is going to allow you to peg orders to a specified level in the book. And so let's say I set primary peg and I'm buying. My new orders are going to be pegged to the bid to avoid crossing the spread, and it will move with the market. You can take that a step further with number of post levels, and that's going to allow you to rest orders at a number of levels in the book that you're specifying so that you have optimal queue placement as the market moves. You can set a delay as another level of randomization for anti-gaming. And lastly, I'll touch on our Minigress quantity parameter. And what that's doing is that's allowing the algo to look for a certain volume on the opposite side of the book, that when that threshold is met, it's going to ignore the other parameters and get as much of it done at the price as it can. And so you can use that a couple different ways. You can set the min and the max show to 0, so the algo is never showing anything to the book. When that quantity is met, it's essentially going to jump out of hiding, grab what it can, and that will either finish the order or it will go back into hiding. Or you can use that with the other parameters, where once that threshold is met, it's going to ignore all those other settings and just try to fill as much of the order as it can at that price. You can also set defaults on all of the algos by product, by account, however many you like through the TT infrastructure. We support all of the templates and stuff, so you can, if you typically do things a certain way, you can set those up specifically for as many as you'd like. And you can save those and edit them at any time. With that being said, that's sort of the end of the presentation. So thank you for joining, and I'm going to open it up to as many questions as we have time for. And so we'll answer